A very good afternoon, everyone. I am CA Sachin Kumar Jain, Regional Council Member of CIRC of ICI for the term 2019-22 and the co-opted member of Corporate Law and Corporate Governance Committee CL and CGC of ICI for the year 25-26, the moderator of this webinar. We are delighted to welcome you all to this webinar organized by Continuing Professional Education CPE Committee of ICI. Please block your calendars on every Friday to get insight into various emerging and high-value technical topics. It is my pleasure to moderate the webinar on Code of Conduct and Professional Ethics and labor law focused on Provident Fund PF. In a short while, we will start the webinar. First, I would like to apprise you about the CP committee. The profession of chartered accountancy is growing leaps and bounds, and its phenomenal growth has brought the profession to the forefront. Today, our profession has acquired an indispensable position in business and economy. ICI continuously aim at the developing knowledge edge so that the members stand out to the expectation of the society. To achieve the objective, the CPE committee of ICI has been continuously striving for perfection, integrity, and knowledge, which make the word chartered accountant synonymous with excellence in the service. In this direction, the CP committee has always been proactive to the emerging need of its member, enabling them to acquire contemporary knowledge and skill to face the challenges effectively by organizing CP program and providing adequate opportunities. Today, we have two sessions of 1 hour each on the following topics: Code of Ethics, Case Studies, Labor Law Focus, PF, Introduction, Compliance Assessment, Penalties, and Lead Market. Our eminent speakers will talk about the above mentioned two emerging areas of professional interest. Now, moving further, let's take a moment to introduce our own CP Committee Vice Chairman, CA Vishnu Kumar Agrawal, sir. Welcome, Vishnu, sir, my elder brother in the profession. CA Vishnu Agrawal, sir, is a Central Council member of ICI for the term 2025-29. He currently serves as the Vice Chairman of the CP Committee and the Direct Tax Committee. Additionally, he is an esteemed member of several other key committees of ICI. With over 2 decades of experience, he is specialized in income tax matters and has also authored the book Landmark Judgment of Income Tax. Now I request Vishnu sir to kindly bless that with the opening remarks. Vishnu sir.
Thank you, Sachin ji. Respected our chairman of the CP committee and my elder brother, CA Satish Gupta ji from Jaipur. Sitting with me, the Secretary of the Western India Regional Council, Jinal Savla ji, and Regional Council member, CA Sweta Jain madam, and our own Regional Council member and today's moderator, CA Sachin Jain from CIRC from Jaipur, and today eminent speaker on the Code of Conduct and Professional Ethics, Chandrasekhar Vajeji from my own city, Mumbai, and another our CA Sunil Kumar ji on the labor law focus from our own brother's city from Jaipur. Friends, today we have thought about all two subjects and both are the technical subject because our young chartered accountants who become member in last 5 years, they are not aware about the code of conduct and the professional ethics. So our chairman have thought about this particular topic and we have today doing the webinar on this particular topic. And another subject is the labor law. Our most of the chartered accountant in the country, they are not doing the practice in the labor law. But whenever our client faces the problem, we hire another advocate and someone else who is doing the practice in the labor law. So our chairman Satish Gupta ji has thought that why we not do the program on the labor law and the code of conduct for benefit of all our chartered accountant across the country. Friends, we have organized this two webinar on this particular topic today, and my chairman in the CP committee is with me because today we have back-to-back program in the Mumbai, and so we have privilege also to Secretary Jinal Savala madam and Sweta Jain ma'am, Regional Council member and Secretary. Chairman Ketan Sayya has also joined virtually in this particular program. So I will not stand between all the other speakers also today because it is going on important topic. and I request Sachin Jainji to take the charge. Thank you, sir.
Thank you, Vishnu sir, for giving us such an enlightened word of wisdom, sir. Thank you very much. Now I extend my very warm welcome to a man with astute intellect, quick understanding, and sharp vision, the chairman of our CP committee of ICI. He is widely respected for his strong organizational skill and deep insight in the affair of profession, and always kept the profession on the higher priority of on national and international platforms. CA Satish Kumar Gupta, sir, my guiding force as Central Council member of ICI for the term 2025-29 and has served as the CCM for the term 2019-22. He currently serves as the chairman of the CP committee and has been the chairman of SMP committee of the SAFA, South Asia Federation of Accountants, and CSR committee in the past. He has been awarded with several honorary awards such as Excellent Branch Award and Special Silver Shield Award during chairmanship of the Jaipur branch, Best Member of the Year 2004 award also. He has written more than 8 papers and has delivered lecture in different seminar, RRCs, webinar on topics like GST provisions, income tax assessment, reassessment under income tax act, etc. Now I invite Satish sir to enlighten us with his motivational welcome address. Over to you, sir.
Thank you, Sachin. But before I speak, I would request my chairman of WIRC, and I am giving trouble him from last 3-4 days, and he is taking all the troubles for the profession and for the fraternity. I would request Chairman CA Ketan Sayaji to please address the gathering for a few
Sir,
minutes.
thank you so much. I'm just below the in 1 minute. I thought maybe I'll just listen to you people so that I don't miss on anything. I'm just on the downstairs only. Maybe in 2 minutes I'll join, sir. You can start. You can talk. I'll just join in 2 minutes, sir.
Thank you. Thank you, Chairman. So, yeah, ma'am.
Please.
Thank you so much for giving this opportunity. Chairman of this committee, Satish Gupta sir, Vice Chairman Vishnu Agrawal sir, and our Chairman WIRC Ketan Sayya, Secretary Jinal, sitting with in this room, all the study circle convener, deputy convener, and all the participants. Very good evening to everyone. It's really a pleasure and privilege for me that opportunity is given to me to speak something. I can, what I can say is our Central Council members are doing a great work at ICI and continuously working day and night for our profession at large. This webinar is a welcome step for conducting on code of conduct, which I can say is need of the hour. We are discussing day and night about code of ethics, in fact, in peer review also, and the importance. We all follow the ethics, but at the same time, we need to know some process, some principle, which we should not forget when we doing our work, when we performing our duty. I will not talk much, and really, it's my privilege to be sit with all of you here. Thank you so much, and over to you, sir, please.
So, firstly, I would appreciate all the efforts of respected Central Council member and Chairman of the committee Satish Gupta sir, and our regional Central Council member CA Vishnu Agarwal sir, for having this brilliant session today. And yes, our humble and dynamic chairman is there, and we will have him in a minute or two. And Shweta ma'am is also here. And also we have all our study circle convener, deputy conveners. So friends, this CP study circle also plays very important role in, learning and upskilling of our members. So, and today's session is also very much important. So let us, without taking much of time, let us understand and move towards session. And with all this, looking forward for your active participation in WIRC programs, and let us, collectively work towards the betterment of our profession. With this, thank you.
Thank you, Gina. And thank you, Sachin, again, for giving time to our regional council member and regional council secretary from the Western region. And our chairman is coming just now here. So my brother, the council and vice chairman of this very important committee, C. Vishnu Agrawal ji, is from Mumbai and a very dynamic vice chairman, dynamic council member, and a very renowned income tax expert. Chairman of the WIRC, C. Ketan Sayyaji, is just to join. Secretary WIRC, Madam C. A. Jinal Savla ji. Regional Council Member WIRC, Sweta Jain ji. Speakers of the day, I welcome Ketan Bhai. Please come and join us. He's a wonderful leader. Thank you, sir. Thank you so much. Speakers of the day, one to whom I respect like anything because he is a real man who can teach us the code of conduct and professional ethics. And again, he's from Bombay, C.S. Vajeji, to whom I respect like anything because I believe, friend, that the code of conduct and professional ethics are the lifeline of CA profession. If we want to get success in CA profession, so this is the important thing which we must learn, which we must adopt, which we must follow by line and word. That is code of conduct and professional ethics, and that I learned it from C.S. Vaje sir, and today he is one of the speakers. So welcome, sir, and thank you very much. The another speaker, C.S. Sunil Kumar Agrawal from Jaipur. He is expert in the labor laws, and not only of the Rajasthan. He will cover the labor law of the country for the benefit of our attending members. Conveners and co-conveners of the CP chapter from Western region, from Mumbai, I welcome you all also. And my dear members who are attending this webinar in a very large number. So friends, see the situation, the three programs are in conflict each other. One is this meeting with the CP conveners and deputy conveners. Another is the webinar which is going on for the benefit of the entire country's professionals, and the third one which we will organize after 5 or 2 hours, a very big session of the day, in which we are taking a faculty which will speak the impact of Trump policy on the capital market. I think the topic of the day or topic of the time, which I can say. Tiwari ji, Ajit ji Tiwari, a very efficient and proactive secretary of the committee for continuous professional education, team CP, and tech team of the who is releasing this webinar. So friends, welcome each one of you, and let me take this opportunity to convey only one message, that CP committee is trying their best to deliver the best of the possible faculties on each and every topic to the entire country through these webinars. As of now, we are holding only one webinar in a week, but Vishnu Agrawal ji was telling me that we should do something more, and we are working on that, how we can make it more effective. So as per his planning, as per his thought process, what we are thinking, friend, that we are going to come for you one speaker of every country. For example, suppose what are the opportunities in UK for Chartered Accountants of India. So we are going to bring that particular person on the through webinar. So we can tell our members that what are the opportunities in UK. So we try that we bring every country's speaker through webinar to all the members of the profession. So they can get that what are the opportunities for the profession in the entire world. Another thing which we are thinking to bring this in CP committee is the industry-wide web knowledge. That is not possible to talk about from the, suppose, Birlaji. Not possibly to meet, not possibly to have his lecture. But Vishnu Bhai has an idea that we should try to bring all the famous industries through webinar for our members. So they can tell us what are the opportunities in their particular field. Suppose what are the opportunities in the textile industry for the chartered accountants? What we are knowing as of now that income tax is there, GST is there, some accounting, auditing is there. I think, friends, we are not touching upon the things which are more for our profession. So we will try to bring all those things for the profession. One more thing which I would discuss with our conveners and deputy conveners also, but just for your information, friends, I need your suggestion. We need your suggestion in the committee that how we can implement the real-time CPE credit for our members. Friends, it is 20 years when the CP credit program was launched. 20 years has gone from 2005, as I told by the Ajitnath Tiwari. Now we are in 2025. So we are very serious, friends. And by 1st of July, CA Day, remember, friends, we would bring that real-time CP credit program for our members. So we need your support. We need your suggestion that how can we make the program more effective, more simple. We don't want to give any trouble for our members, but we don't want to give any credit which is not being attended by the member. So these are two things are clear. So I and Vishnu and other members of the committee has already approved in the first meeting itself that we should come out with this program. But we are working that how we can bring the simplest and the best possible solution for that thing. So we are working on this particular item in the CP. Another thing which we are working, friends, that we want to reach the remotest corner of the country through CP program. You will see that we have identified our committee under the Secretary Ajitnath Tiwari ji working. We are working and we are identifying the areas where CP ko naam jante nahi log baat. They don't know what is CP. They even don't attend the CP program. And if they want to attend, they need to travel 200 kilometers, 300 kilometers, 400 kilometers, which is not practically possible. So we are trying to reach them, just like Antodaya. So what name we have given to this program? Sarva Sulabh. Yeah, Tiwari ji, would you correct me? What is the name of our program?
Sarva Sulabh, sir. Yes.
For each one of that member who is not reaching to the CP, but we want to reach it. So like this, friends, we are working on so many sectors, and we want to open this year at least 1,000 new CP chapters, circles for the groups. This will be a record in the history because I think I have a dynamic vice chairman also and a dynamic committee members, and under the dynamic leadership of my president and the vice president and the chairman like Bhaiya, Ketan Bhaiya. So we would definitely do what we have thought of, friends, but we need your support, we need your suggestions, we need your blessing, and just forget the individual interest. Just see the interest of the profession. Just see the interest of the fraternity. And you will see that if the change which we bring for the profession will be remarkable, marvelous. So not much of time because all our leaders are sitting here. We would talk to them. So thank you very much. Thank you each one of you for this webinar. Thank you, Sachin. Thank you, Sunil Bhai. Thank you, Vajay sir. Thank you, Ajit Bhai. And thank you all the team members for giving us this opportunity. And I would request my brother Ketan Bhai to speak a few words, sir.
I think thank you so much, Satish sir, Vishnu sir, for a wonderful webinar. I think, as rightly told by the CCM sir, under their leadership, the fantastic program will happen, and a lot of dynamism is expected in this year in the entire structure of the CP and the credit which members get on a real-time basis. I think this is the need of our, and ICI under their committed leadership will implement. I'm very sure that on 1st July we will have such a mechanism. It could be an app, or it could be a mechanism wherein no more putting of slip and no more getting a credit after 1 month, and it will be a credit on a real-time basis. I think this is what in the time of AI, when the ICI is the leader in AI, I think this is the proper decision which the respected CCMs have taken, and we, whatever support we will require from the Western India Regional Council on behalf of all my council colleagues, we are all committed and will stay committed. And Abhay sir, thank you so much for always being there and guiding us. Abhay sir is also there. And all the dignitaries, I think wonderful program is awaited. So not coming in between of this program. Thank you so much. Over to you, Satish sir.
Thank you, sir. Thank you, Ketan Bhai.
Thank you, Satish sir, our own CCM and our WIRC team, CA Ketan Damji Sayya ji, Chairman CA Jinal Kenil Savla ji, Secretary and Shweta Jain ji, RCM, for sharing their insightful vision and inspiring us to consistently uphold the highest standard of our profession. I just want to update to the attendees that around 750 participants are attending this CP event. Friends, today our topic is Code of Ethics. These ethics tell us the Maryada we have to observe while dealing with the clients or performing our professional services. Friends, there are so many things which we as a chartered accountant must know that these are our maryada or our limitation, or we can call them as code of ethics on which we have to perform. Ethics is knowing the difference between what you have a right to do and what is right to do. Sir, the Institute's Code of Conduct outline principle guiding members' behavior for member in audit, management service, and consultancy. The institute provide mandatory guidelines. While adhering to these ethics, new practitioners often face challenges. Specific challenges including restriction on advertising, soliciting clients, and communicating with the previous auditors. To address these concerns, we have organized a webinar providing an overview of the Code of Ethics, aiming to support your young practitioner in navigating these requirements. As already said by the Vice Chairman, sir, the last 5 year chartered accountants required this insightful uh, requires. Today, our knowledgeable speaker, C. Chandrasekhar Vade sir, will guide us through case studies regarding our Maryadas. Sir practiced as a chartered accountant for more than 40 years. He has delivered lectures and written articles on taxation, banking, and allied subjects, and on code of ethics of CA. He had held many responsible positions in many organizations and has delivered lectures and written articles on Valmiki Ramayana, Mahabharata, Bhagavad Gita, and many other social subjects. Recipient of renowned award like Yogi Mitra Award, Best Social Worker Award, Jal Dastur Award. Now I invite our today's CP webinars first speaker CA Chandrasekhar Vade sir for deliberation of his session. Before we proceed to the second session, we will dedicate the last 10 minutes to a question answer segment where you have the opportunity to ask the questions and clarify your doubt. Over to you, Vade sir.
Namaskar and good afternoon.
Namaskar.
Namaskar. I just adjust my PPT.
Sir, interrupting you, one question is coming as the deadline of that answer is 5 p.m. only. Can I ask it right now?
Yeah, sure.
We can extend, sir.
One,
That's not a concern. We can extend a little bit.
yes, sir. As there is a requirement of NABARD audit of Baroda Rashtriya Kshatriya Gramin Bank and for the statutory audit, and the consent is to be given before 5 p.m. today only. The person is asking that he is a concurrent auditor of Bank of Baroda. And the BRKGB is the sponsor bank. Bank of Baroda is the sponsor bank of BRKGB. So can he do the statutory audit of BRKGB while doing the concurrent audit of Bank of Baroda?
Tricky question, but as I understand, there should not be a problem there because both are separate entities, and that particular thing, Bank of Baroda, his position is not in a position to influence the working or the functioning of NABARD. So that is how I understand it. But then we'll have to study it further. So it is a tricky or dicey question. But according to me, he can go ahead. Because I would have no question, then he can go ahead.
Thank you, sir.
So friends, at the outset, I must thank Mr. Satish Gupta ji, the chairman, then Mr. Vishnu Agarwal, who is my very close friend, Mr. Sachin Jain, Mr. Sunil Kumar, my co-speaker, and then Mr. Ajit Nath Tiwari ji, Shweta Jain, Mr. Ketan Sayya, again a close friend of mine, and all the dignitaries who are attending this and all the members who are attending the program. Friends, my topic is focused on case studies. Usually, those who have heard me, they are aware that I need about 3 to 4 hours just to give the glimpses of the topic of code of ethics. But today we have, I can understand that the timelines are there. Therefore, to stick to the timelines is also a part of our ethics. And therefore, I'll be sticking to it very strictly. Well, our motto, as you know, is Yesha Sukteshu Jagarti. That means he who is awake when the world around is asleep. And friends, today is really a need for awakening. At the outset, let me tell you that the term code of conduct and code of ethics, people use it interchangeably. very few people know the background and the exact distinction between the two expressions. So let me clarify it first at the outset. Well, friends, code of conduct is a very generic term. That means conduct could be good conduct or bad conduct also. Whereas ethics essentially denotes something positive. So there is no such thing as good ethics and bad ethics. And therefore, either there are ethics or there are no ethics. This is the main distinction. Therefore, our institute took a conscious decision somewhere in 2000 that instead of code of conduct, we will use the word code of ethics. So this is the background one should always be aware. I also compliment the CPE committee to have labor laws also included in this, especially in the context of NOCLAR. Because NOCLAR, we are supposed to know and report on the other laws where there is a violation, so non-compliance with laws and regulations. And labor law is one of the most common aspects where there is a violation from the business entity. And therefore, it is in a fitness of things that we have a good expert to speak on labor laws as well. Otherwise, people will wonder what has ethics to do with labor laws. But NOCLAR has established a direct connection between ethics and all the allied law. And therefore, the committee deserves compliments on that. Now, as I told you, by case studies, I have divided into two parts. I'm aware of the constraints of the time. That is why I'll be going very quickly. So that is why I may skip the theoretical aspect of it. But let me give you one very clear, certainly very clear, that code of ethics should not be perceived as a burden thrust on us, but it should be treated as a shield to protect us. And the society expects that the code of ethics should be enforced very strictly because they complain that our code of ethics is rather very loosely administered and that the punishments awarded are very mild and it takes a lot of time to dispose of the complaint. The sources of code of ethics is now, since we have ancient scriptures, Satyam Vada, that means speak the truth. Dharmam Chara, that means follow or rather discharge your duties religiously, that is Dharmam Chara. And Swadhyayat Ma Pramadha, that means never commit any default in your continuous studies, and that is our CPE. So this CPE comes from our ancient scriptures of Swadhyayat Ma Pramadha. And CPE, unfortunately, our people, members at large, do not understand and appreciate the spirit of this CPE concept. But Institute deserves compliment that actually this CPE and it should be very rigorously implemented. Well, about how it is actually people get CPE and all, the less said, the better. But our chartered accountant is perceived as a person who is not very assertive, but is very accommodating. And the credibility is gradually diminishing. Therefore, one must understand that two important maxims, because that is the framework, that is the foundation of our ethics, that work should not only be done, but it should be seen that it is done. That means the work which is not documented is work not done at all. That is one. And always remember, faintest of ink is stronger than the strongest of memories. That means, howsoever great memories you may have, but remember, you should not do anything in merely on good faith, just on an oral communication. There has to be a proper documentation of each and everything, and this is becoming very stressful. In fact, in large corporates and large firms, this continuous communication on emails or on social media is becoming so strenuous that the simplest thing you do has to be documented. And if there is no proof, then you will have a lot of trouble. And therefore, sometimes it is being stretched too far nowadays. But yes, this is the rule of the day, or perhaps this is the present work culture, and we can't escape it. But another thing that what is we are lacking and why we are often get caught in the code of ethics or disciplinary mechanism is that we are not proactive. So we must have a proactive approach so that these ethics and the rules and other things, because people, chartered accountants are known for that they wake up only at the 11th hour. And at the 11th hour, they have hardly any quality that can be added. And therefore, because of lack of communication, and we also lack communication skills. Good that our institute is making special efforts to improve our communication skills. all these cases which I will be sharing with you are actually the part of lack of improper or untimely communication. So communication is of utmost importance. I'll now straight away go to the cases because friends, I have so far occasion to handle about more than 400 disciplinary cases. And therefore to condense them in such a short time is a great challenge. But I'll very briefly tell you, because unfortunately what has happened is our institute has published 3 volumes. First, volume 1 on the Code of Ethics is of course based on the IFAC, the International ESBA Code of Ethics. That is the philosophy, perhaps, that is the guiding principles of the ethics. Then second is the part 2 or volume 2 that covers our CA Act, regulation, rules and everything, which is more familiar, or we chartered accountants get more comfortable in studying the acts and rules. And the third is the compilation of case law. Now, compilation of case law, the limitation is that each case is a different case. There is a distinction between each case. Just as in income tax, we say that each case is a separate case. There are hardly 2 cases which can be exactly identical. There could be different facts, there could be different circumstances. Nevertheless, the cases which I'll be dealing with you, the 3 or 4 cases initially are the decided cases by the High Court, which are setting up the principle. And thereafter, I'll be sharing with you the cases which I have myself handled, but which are like eye-openers. So, these schedules, my one caveat is there that don't stick too much or to this PPT, because the things which I will be dealing with are basically in the nature of stories or the cases. But remember that these are not imaginary stories. These are the cases which I have myself handled. And the first case, which is the setting the principle, is very important. It says that there was a question before the High Court that whether this code of ethics is applicable to a chartered accountant anywhere and everywhere he goes, or it is applicable to a chartered accountant only when his presence is there in the capacity as a chartered accountant. For example, if a chartered accountant misbehaves somewhere, then whether it is necessary to see that whether he did it in his office or in his other CA's office or in a CA conference or at a client's office, where his presence was essentially coming out of becoming a chartered accountant. Whereas, even if he is traveling, even if he is attending some private function, whether still the code of ethics applies, and the High Court said yes. The logical reason is that if you remember and if you see how it is publicized in the press writes is that chartered accountant held for such and such thing, chartered accountant held for bribery, chartered accountant held for masterminding a scam. That is why the entire profession gets disabled. The image of the entire profession gets tarnished. And that obviously our institute and the council and of course the judiciary does not want to happen. And therefore, wherever you are, the code of ethics is equally applicable. It is not necessary that you did something which is there only in your capacity as a chartered. That is why there are 2 types of misconduct. Section 22 defines misconduct as any of the items described or mentioned in the schedules 1 and 2. There are in all 34 items, as you can see on the screen. There are 34 items. There are 4 parts in the first schedule and 3 parts in the second schedule. So any of these items and other misconduct. Now, other misconduct is a wide expression. It covers even anything that brings disrepute to the profession. I'll explain to you what is this other misconduct, but that has also now been codified. So part 4 of this first schedule, there are only 2 items in that, and it is codified the other misconduct in 2 parts. One is that if you are held guilty under any other law by a competent court, and if the punishment prescribed for that particular crime or offense is an imprisonment not exceeding 6 months, then it falls in first schedule. Whereas if it is exceeding 6 months, the punishment in that respective act is more than 6 months imprisonment, then it is in the second schedule. So let me come to the distinction between first schedule and second schedule. First schedule offenses are considered to be of lesser gravity. Main distinguishing feature is that usually there are items in the first schedule which are affecting the profession within itself. That means, for example, say non-communication with the previous auditor, or soliciting, or advertising. So these are all doing business without any other occupation, without the institute's permission, where an outsider is not adversely affected. Who is affected is usually within the members only people are adversely affected. Therefore, these are considered as of lesser gravity. Accordingly, the punishments are also milder. Whereas for the second schedule is considered to be the more serious one, more grave nature, because their outsiders are also affected. The best example is your gross negligence, or you can say lack of due diligence, or non-maintenance of separate bank account for clients' money, or you are certifying something which you have not verified, or certifying something of your own relative where you are interested. All these are falling in the second schedule, where your credibility to the outside world is at stake. And therefore, first schedule and second schedule, this is the basic distinction. And the other misconduct, the other item and the code of ethics, as I told you, first schedule, part 4, is that anything that brings disrepute to the profession. Here there are even dowry cases also. That means your behavior is unbecoming of a professional or unbecoming of a chartered accountant. Then there is another decision of the High Court, which people try to put it forward for their defense, but there is a limitation to that. The High Court has said that every error is not a misconduct. Even a blunder is not a misconduct. Even a negligence is not a misconduct. Misconduct contemplates something gross negligence. And what is gross negligence? They have defined it as there should be a lack of honesty, or there should be an ill motive or dishonesty. Now, if you try to go and plead before the disciplinary committee that I certified something, but I did not have any dishonest intentions, nor did I have any ill motive. The counter argument from the disciplinary committee, which is rightly so, is that suppose you have a friend who is an engineer, who is a very straightforward person, he doesn't get involved into any hanky-panky, but he doesn't understand much in the accounts. Now, if he presents his balance sheet before you and he says that his accountant has prepared it, and he requests you to put your signature because he has to deliver it urgently to the bank for loan, and if you certify it on the basis that he is my good friend, and he will not do anything which is unscrupulous or which is not correct. So in good faith, you put your signature. And if something happens, you cannot plead that I did not have any dishonest intentions, I did not have any ill motive. But the very fact that you have signed something or certified something without verification in itself is a misconduct. And that is described in our schedules. So the signature of chartered accountant is a hallmark of credibility. So when a chartered accountant has signed something, people should be sure that he has verified. In fact, there's a very interesting case. Because of the paucity of time, I may not be able to deal with all the cases, but the very interesting thing I'll just mention, that a lady had prepared a will and she died after about 10 to 12 years. And when that will was opened, it was found that a chartered accountant had signed it as a witness, but the lady testatrix had not signed it at all. Now that is very dangerous. That means by signing it as a witness, you are making a false statement. It is a criminal offense, because when you say that you are a witness, that means you make it sort of an oath that that person has signed in my presence. And we take it very lightly, we take it very casually. We take our own signature very casually. We don't respect our own signature, and that is why the society also takes us for granted. And therefore, remember that, and another case law, which is a landmark decision, that auditor is only a watchdog and not a bloodhound, that is also getting diluted. That principle is getting diluted because, friends, now see the times have changed. Now we are in the era of AI. We are in the era of technology. So what happens is, previously when chartered accountants of our older generation, they were practicing the clerical skills, calculation skills, presentation skills, they were assuming a lot of importance. That is why the tallying of trial balance itself was a big challenge. Whereas after the automation, now these mundane things chartered accountants are relieved of. And that is why if you check the systems, you can have some diagnosis of the, or you can read the pulse of the client's accounts. And therefore now you are expected to focus on something better, something more niceties, so that you can smell something. If it is something foul, you can smell it. And remember that although they recognize that detection of fraud is not the purpose of the audit, but now the society expects that the chartered accountant should be able to detect the frauds, and that is also that. And if you follow and implement your standards on audit, there are many things which can be explored very easily. The most important thing is third-party evidence. If you apply third-party evidence principles strictly, many of the scams can be avoided at the outset. It means at the root itself, because we certify something in good faith. I'll be giving many such examples, but now let me share with you a very interesting case, very brilliantly argued case in favor of the chartered accountant. All these cases, otherwise, say they are some chartered accountants, they are normally against the chartered accountant, but this is very brilliantly argued and very intelligent case. See, there was a company, case is very old, but the principle is very interesting. There was an addition in the company's assessment, income tax assessment, say about 25 crores. There were 8 to 9 grounds of dispute. The company approached the chartered accountant and they asked him to prefer an appeal and also attend that appeal. The chartered accountant quoted that he will charge such and such percentage of the total addition made to the assessment. The company accepted it. When actually the appeal was heard, and in the normal course, whatever happens in the appeal, like some grounds were allowed fully, some were partly allowed, some were rejected, all that normal thing happened. Then he raised an invoice saying that my fees is, for example, 3% of 25 crores, which was the addition. The company wrote that very, rather I would say, very nasty letter. They said that you have charged on a percentage basis, and it is unethical for a chartered accountant to charge on percentage basis. And since you are unethical, we don't want to pay you. Although he had done the justice to the work, still they say that since you are unethical, so they are doing under very strange pretext to avoid the fees. But it was very intelligently argued, and we must remember and must give compliment to that lawyer. He said, what is prohibited, what is banned, is the percentage of the result or outcome of your work. What he has charged is he has charged on the entire addition made by the assessing officer. That means he has done his input on all the grounds of appeal. For example, if there are 8 grounds of appeal, then he had done his input on all the grounds of appeal. He has spent time gathering data, presenting the data, research work for the case law and other things. So what he is charging is on his input and efforts and the time, and not at all on the result. And the High Court upheld this. So this is very interesting. What this emphasizes is that we should read our items of misconduct which are there in the schedule very minutely. If you minutely read, if you take it very, some impressions you are having about it, then it is not a proper justice to the study. We spend so much time on studying of GST, corporate law, and income tax, but our own law, which is governing ourselves, the chartered accountants are very rather indifferent about it, and that is the most unfortunate situation. And that is why society does not respect us too much, because they take us for granted. And remember, friends, maybe there are 2-3 things which I must share. That government also does not respect the chartered accountants much, although we say in the seminars and all that it is very dignified and all, because there is one important factor, and we must introspect on that. That they say that so many scandals are happening, so many frauds are happening, but there is hardly any instance where a fraud or a scandal has been exposed by the auditor or the audit. Now, you may argue at length that audit is different than investigation, all that they recognize, but there are certain things by simple audit techniques you can detect something. And today, society and the regulators expect that you should be, that is why I said, That means he who is awake when the world around is asleep. Because whenever there is such fraud, the first question that the public at large asks is, auditor kya kar raha hai? So remember that people expect many things from you, but we lack unity. Unfortunate part is that we lack unity, and that is why the people treat it as something like a spineless profession. That means we can't say no at all. Once you are assertive, our respectability will increase. But unfortunately today, there is no unity. What if at all you reject to sign any particular audit, there are 100 others who will sign it, and that is the real cause of our problem. Our profession has become so vulnerable, friends, that you do anything and there is some misconduct of yours. So it is extremely necessary for us that in fact, in every office or in a group of offices, there should be a continuous bombarding on these ethical principles. It is not just because of that I am idealistic or that I am a philosophical person or no. It's not. It is for our own survival. Today, friends, unfortunately, hundreds of chartered accountants are on bail and a few dozens are in jail. When people invite me that we should speak to the young chartered accountants, I always feel sorry that otherwise they hear all these cases, then they will be rather try to run away from the practice. That is not my intention, but I am sure that CP's intention is also to caution them. So to caution them and to do everything correctly, perfectly, so that the credibility of the profession and the institute's main motto or council's main motive is to maintain and uphold the reputation and credibility of the profession. And that is why now I will share with you the cases which I myself handled. And these are very interesting and very eye-opening cases. I'm just very much time. Yeah. So a few cases, and that has nothing to do with this PPT slides. First case which I always share is that husband and wife both were chartered accountants and they were practicing independently, separately. They were not as partners. Wife did the audit of a small housing society, cooperative society for 3 years. And as you know, there is a rotation in the cooperative sector. And next 3 years, husband did that audit. But in the 8th year, there was a divorce petition between the two, and the wife filed a case saying that the husband took the audit without obtaining her NOC. To that extent, people are taking advantage of the, or rather undue advantage of the rules of ethics. That means even with your wife or with your spouse, when it comes to signing of audit, the documentation has to be. You cannot trust anyone in blind faith. And that the reason is today, because these are the causes which I am telling you, that the social degeneration of values, that unity is not there. There is no family system is also crumbling. People, you will wonder what has that to do with the ethics. Because friends, no relations today are permanent. No relationships are permanent. The client was very close to you. You might have done a lot of things for him. But when it comes to the dispute, actually he doesn't even recognize you. And you remember, friends, most of the cases, like more than 90% of the complaints arise from the dispute among somebody else. Like two partners are disputing, or two directors are disputing, or a group is disputing, or there are some other disputes in some other context altogether. But it is very big. Chartered accountant has become a very easy and the softest target, so that he can be made a scapegoat. And therefore, people feel that they should harass the chartered accountant to exert pressure on the other side. And this is the main cause of many complaints. Therefore, I have rather handled the cases filed by brother against the brother, father against the son, son against the father, spouse within the spouses, all relationships. There are clients who are taking undue advantage of this code of ethics. So we should be very well prepared. They study it more. They have a lot of nuisance value and they have made our profession very vulnerable. So this is the first instance that I give. That relationships, don't take anything for granted. Whenever it comes to signing or putting your signature, be very firm and learn to say no. If you say no, your respect will increase. But if you is taken for granted, then you are sure to invite trouble because you do many things innocently. And now NAFRA has come. NAFRA, the documentation has to be at its peak. That means, and that audit trail and everything is now properly viewed. I will be sharing with that DHFL case, which was a landmark thing in NAFRA. But let me share with you the next case. The chartered accountant was sitting in his office and he was handling the tax audit of another of his client. That client's daughter comes to his office and she says that she wants the ITR of her husband and mother-in-law to be attested by the judge. He had not filed those returns, but she had got the hard copy, so he verified it in the computer and he saw that everything was all right and he attested those and gave it to her. He gave a proper certificate because, as you may be aware, Institute has prescribed the methodology with which we should certify that we should give a disclaimer and all those things. That he did properly. Still, he received a complaint from the husband of that lady as to how, without my written authority, you parted with my attested ITR to my wife. Why this happened? Because the wife had filed a case of domestic violence against the husband. That means, that is why I am saying that then what you have to do is professional skepticism. Professional skepticism means what? You don't suspect everything. You trust but verify. That trust but verify is very important. Now there are many cases where there's a big listed company with 10,000 crore turnover and all the balance sheets presented in a very glossy paper, and all the at the end of affair there are very large reputed firms as auditors, consultants, their CFO, all the team is great, and they have a stock of about 600 crores, and they approach a very small chartered accountant somewhere in the other city also sometimes. For example, the registered office is in Ahmedabad, but they will approach some chartered accountant in Mumbai, and they expect him, a young chartered accountant, a very fresh chartered accountant. This is basically for freshers. So they will expect him to certify the stocks, value of the stocks, and they offer a hefty fee of say lakh of rupees. Now that young chartered accountant feels, "Arey, itna bada company hai, itna sab acha hai," so that means stocks also should be proper. And therefore, without much verification, he certifies and then he invites trouble because the real stock may be even 35 crore, as against the 600 crore which is certified. Remember, the professional skepticism means first question should arise in his mind as to why such a big company has approached me. I am such a small person. Now, for example, I happen to be a director of a small scheduled cooperative bank. If a large company wants 1,500 crores, 2,000 crores as the loan, and they are approaching me for 100 crore loan because that is the limit of our bank, for example, the first question that we ask ourselves is why this company has approached a cooperative bank. Are they under an impression that they can suppress, they can have pressurized interaction with us so that we will grant it? So professional skepticism is of utmost importance. And here also that chartered accountant should have considered as to this lady has never ever earlier come to his office. Her father also did not indicate that she is coming. Her husband obviously did because he did not know him. But then why she has come and what was the real reason why she wanted that certificate, that he should have asked, and now our institute says that we should write the purpose. Not only that, this request to issue certificate also should be preferably in writing, because many people take our certificate for say tenders and other things, or export awards or any such thing. Now, we should always specify as to what is the purpose of issuing the certificate. There are many cases, I wonder whether how much time I have. Okay, still time. Next case, this is a very interesting case now, friends. See, this firm was very old firm. More is very senior firm, say 80-year-old firm. And there was a client of theirs, about say 25 years, they were handling the audit of a private limited company. Now, in that private limited company, there were only two shareholders who were directors. Elder director was holding 60% and younger was holding 40%. Now, When there were 4 days left for the submission of return, the younger director approaches the firm and says that you have done the audit properly. So let me now I request you is, as usual, you put your signature. My brother is very busy, so I'll obtain his signature and submit the return. In good faith, friends, that chartered accountant obliged him, he put his signature. That younger director took that bunch of papers, he obtained the elder brother's signature, but never put his own signature. So he had a scheming mind. And therefore, what he did, he submitted the return and filed a complaint against that chartered accountant on 2 counts. It's a very big firm. All systems were in place, but now what are the 2 grounds which are eye openers? First ground was that under the Companies Act, 2 directors' signature is required, but here only 1 director had signed, and therefore it is a violation of Companies Act, and therefore it is a misconduct. That was the first round of complaint. Now here, let me explain, because that is another misconception among chartered accountants, that they feel that if 2 directors have signed, that means that's the end of it and they can sign. What is of utmost importance, supreme importance under the Companies Act is the approval of accounts in the board meeting. Now here you can argue that only 2 directors were there, so the 2 have signed and it is deemed to be approved in the board. That's a different story. But otherwise, the sequence is that the accounts or financial statements are presented in the board, they are approved, then the board authorizes 2 or 3 of them to sign, and the signature is secondary. Signature of 2 directors is a consequence of the approval. Therefore, friends, it is utmost necessary for us to take a certificate every time, because we do lot of things, lot of paperwork on behalf of the clients. But we fail to obtain one simple letter, it could be a stereotype letter also, saying that these financial statements were approved in the board meeting held on such and such. This is of utmost importance. And that we, or rather, hardly any of us would be taking such a confirmation from the company. So, if that is the case, then merely because it is signed has no value. Please remember this. So, this was the first round of complaint. Second complaint is another very interesting, very minor thing, but very eye-opening thing. He said that one of the cars of the company was registered in the name of only the senior director. It was not, obviously there was a friction between the 2 brothers. And the auditor did not make any comment on this fact because it was not registered in the company. Now our chartered accountants are under a fond belief that since the depreciation is allowed under the Income Tax Act, even if it is registered in the name of the director or a partner, therefore there is no need to check that. But remember that when we certify the financial statement, the assets and liability of the entity, it is our prime duty to verify whether that asset is really registered or really it stands in the name of that entity. Because we say assets and liabilities. So this is of utmost, and hardly any chartered accountant, I am sure, will be verifying that whether the car or the vehicle is registered in the name of the company. Now, since we ourselves don't know it, we cannot train our people. So that is another area which is very seriously lacking, is that we take our CP hours very lightly. Therefore, we don't upgrade ourselves. And since we don't upgrade ourselves, we spend very less time to the training of the staff and training of the articles. And remember, friends, when we say working paper management, there is another PPT also which I have said, working paper. Who is going to prepare the working papers? Working papers are expected to be prepared by your staff and articles. Now, unless you train them, it is not possible for you to create and make the working papers. Now, I come to the DHFL. Please let me know how much I can extend. Otherwise, it's already 4 o'clock. Now, 5 o'clock.
Sir, you can continue, sir. Please.
Before that, in the beginning, I mentioned many names of the dignitaries, but I must also thank Mr. Akshat of the CP committee who actually coordinated with me, and he was very cooperative. So these 3 cases are the prime cases. Now I'll just tell you some cases very briefly and very rapidly, because I cannot have time to elaborate on them. But friends, there are professional blackmailers also. That means they find out the flaws in your financial statements and they try to blackmail you. So these 2 or 3 such blackmailers were exposed actually during the hearing. That is another principle. The case law means there is another principle. Because in the principles, one important principle is that the locus standi of the complainant is not relevant. That means totally stranger, totally outsider also can complain. Many people feel that अरे इसका इस केस से क्या लेना देना है, but counsel says that since it is a quasi-criminal proceedings, anybody can complain. It is also another principle that the person who is coming before the forum, normally it is a jurisprudence says that whenever you are approaching a judicial forum for any relief or remedy or justice, you should come before it with clean hands. But this principle also does not apply to this, because there are cases where the chartered accountants, the complaints were filed by the persons who are confirmed convicted criminals. They are behind bars also. But counsel rightly say that we are not concerned with their character and their behavior. We are concerned with only with the character and the member, the behavior and the conduct of a member. We don't have jurisdiction over any other person. That is why our institute has jurisdiction only on members. And therefore they say that there are other forums to take care of his crimes, other person's crimes. But you only show us that you have done the work properly. So this is another very good focus of the council. Otherwise, there is no end to its work. So the council has taken a rightly that particular stand. It may appear that it is a very narrow stand, but yes, it is very right in the sense that they say that we are concerned with your behavior because our motto is to verify or examine whether you are fit to continue as a member. So this is very important thing which and therefore that complainant did not come with the clean hands. Then there one more some principles are there that even if because of your misconduct or because of your negligence, no one is adversely affected, that cannot be a difference. Counsel says that you show that your work should be perfect in all this. I will give you 2 good examples of this very briefly. That if there is a charitable trust and you have done the audit and there is 100% tax exemption, then even in the appeal also it is accepted, established that it is exempt. But if the income tax department notices that there was a flaw in your financial statement, they can still file a complaint, and you cannot argue that even if there was error in my balance sheet, still the revenue is not affected or revenue is not lost. That defense is not open to you. So this is another very important. Another example I will give you. That you certify the balance sheet of a client, the client obtains a loan, and he services the loan very systematically, very regularly, and he even closes the loan also. Still, if there is a flaw in the financial statement, the banker can still file a complaint saying that the financial statements are incorrect. Now, at this juncture, let me also mention to you the main difference between complaint and information. Complaint means there is a prescribed form and you have to file it. There is a filing fee and other things. The main distinction between complaint and the information is that when there is an information, usually these regulators like ROC or all revenue department, tax, GST, property department, they pass on many things as information, especially when there is no case of fraud or when there is usually no loss to the revenue or to the government. There are technical reports. So they pass it on information, like RBI, NSC, SEBI. Now the institute first writes to them whether we have to come by a complaint or it is only information. Now if they don't file a complaint, then the difference is that our institute writes to them that we will deal with the complaint and we will tell you only the end result of it, because then you are out of the picture. That means if you are a complainant is there in the proceedings throughout the proceeding until the end. Whereas information means, now I'll give you a good example of information. See, there is the executor and trustee company. You know that they execute the wills of the deceased clients. There was one such will which was being executed, and that deceased person's daughter was interacting with the management of the company. And she said that the interpretation of the will should be this way. Whereas they were not listening to her. So she wrote to the directors. Directors also did not heed to her request or any such communication. So then what happened was she was aggrieved, and just to teach a lesson to the directors, she engaged another chartered accountant and asked him to find out the flaws in the audited financial statement. Now that had nothing to do with her complaint. Now he pointed out some technical things like say AS3 is not properly done, AS18 is not properly done, whatever. That had nothing to do whatsoever to her basic deal. She filed a complaint to the ROC, MCA. ROC summoned all directors and the chartered accountants because the flaws were obvious, they were evident. Now, the directors explained to them that this is a mischievous complaint and she had nothing to do, this particular thing had nothing to do with what actually she is complaining for. ROC accepted it and said, let us compound it. So everybody paid 5,000 rupees, including the auditor also paid 5,000 rupees. Now they are scot-free directors, they are having relaxed time, whereas ROC in such cases, as I told you that when there are technical defaults, they have a system of passing on everything to the institute as information. And therefore there is a huge tendency at our council, the director discipline, because many such information templates are keeping coming. And that is why it takes 3 to 4 years sometimes to dispose of a complaint because the procedure is that way. There was this third party evidence, as I told you, including in the working papers, one company compiled chartered accountant firm, there was a fraud, and they had compiled excellent working papers. And when we sent that in their defense, the institute wrote back and asked only 2 questions. Whether you had written to the banker for the confirmation of the account statement. They said we did not write, but we have the photocopies of the bank statements themselves and the accounts are reconciled. About the other thing, they said the second question was whether you wrote to the debtors or creditors for confirmation. They said no, we have not done it. Now this is another flaw of all the auditors, rather at a middle level or a semi level, that we are very least concerned and least serious about the third party evidence and confirmation of balances. And therefore, suppose there are suddenly improvement in the turnover, improvement in the profitability, you should smell that there's some IPO maybe on the offering, or there could be some CDR or whatever, or any ECB. So then we should be, that is professional skepticism as to how suddenly your turnover has got increased, how suddenly your profitability has increased. When you ask these questions, it is the duty of the auditor to ask questions. That is the culture, that the habit that we should inculcate very consciously. Unfortunately, chartered accountants don't ask many questions, and if they ask, it is at the last moment, at the 11th hour, when they are themselves under the pressure of signing the balance. So please be proactive. Now here I will explain to you the distinction between gross negligence and lack of due diligence. In so far as they obtained the bank statement, and now I will tell you a very important thing, 2 points. One is that in so far as they obtained the bank statements, they had done you cannot say that they are grossly negligent, but unfortunately the reality was, friends, almost 80% of the documentation in that company was fabricated. The head office was in Mumbai and they had some mines in Odisha, and all the things were fabricated, including the bank statement. So this is very important. Similarly, that one point I forgot to mention about the director who filed a complaint about this car registration and once a director signed. You will ask me that despite of such a relationship of 25 years, and the company was doing well, the firm was reputed and senior, why he filed a complaint? That is more interesting. The case law, actually, that the ultimate thing is this, that he filed a complaint because he had approached the firm with a request to accommodate his daughter as a dummy article, which the firm denied. And therefore, as a vengeance, he filed a complaint against the firm. So, you just cannot afford to antagonize anyone. That is another lesson that we should learn. Then there are many things which DHFL, finally I just shared with DHFL because that was an APRA matter. And then I will close because I am aware that the co-speaker also may be in. Now, DHFL, friends, what had happened was there were about 200 branches. the company for last 15 years, the system was like this, that the company used to appoint the statutory auditors in the regime, and then the branch auditors allotting, say, 4 or 5, about 40 branch auditors were there, 4 or 5 branches to each person. That board was only allotting. And the board used to write the appointment letter saying that in consultation with our statutory auditors, you are hereby appointed as a branch auditor. And you have to give report in this format, you have to address your report to the statutory auditor, that was there. And the payment also was to be done by the company. Now, that was the first thing. Secondly, when this DHFL bubble was burst in the year 1780, and that litigation about the writ petition was still going on, because that was a NAFRA case, and the jurisdiction of NAFRA itself was challenged. And the second was very important. There are many points or defects that they have brought. First point of NAFRA was that under the new Companies Act 2013, even the branch auditors are also to be appointed by the company in general meeting, and it is not for the board to appoint the branch auditor. Now, this was position under the 1956 Act was different, but last 15 years this was going on. So since it was going on for 15 years, just the chartered accountant have always a system of as per last year. We just carry forward cut paste approach. So that was happening, and therefore they said that your appointment itself is invalid because under the new Section 143(8) of the 2013 Act, even the branch auditors are also required to be appointed in the AGM. So this is a very important fact. And second important fact is that the auditors and we people, especially SME people, we hardly ever write an engagement letter. And SA 210 makes it mandatory that once you receive the appointment letter, it is mandatory for you to write an engagement letter. Engagement letter defines the scope of work, how your methodology as to how you are going to execute the work, then how many branches you need, how many people you need. So they have given a wonderful specimen of the this engagement letter. Hardly any chartered accountant gives engagement letter. And friends, for your information, in the BCA journal, Bombay Chartered Accountant Journal, last 15 years, I have been writing as one pager on ethics and you, it is in the form of dialogue between Krishna and Arjun. And when I wrote about this engagement letter, there are many calls I received. It is good that you wrote it. Now we have given all the engagement letters for past 3 years to the company. So, friends, that feature you can read because it is in a very lighter vein. And in short, what I want to emphasize is that basically you have to be upgraded. Technology, GST, all this is there, but there should be a brainstorming session as to problems faced by us. And the last one lady mischievously used the chartered accountant mobile and sent bad and obscene messages to herself. And she went to the police and got that chartered accountant arrested, saying that this is disrespectful. So many things are happening. You cannot afford to be very loose or casual about things. One very small case again I will share is that about the stock statements I said. See, we good faith we proceed. This is perhaps the last case because there are many hundreds of cases I can share, but this is again very important of our day-to-day practice. There was a gym company, very reputed gymnasium, and they were establishing their expansion at 9 places. And they had ordered the gym equipment from a reputed company, and the loan was sanctioned and disbursed also. It was made directly paid to the vendors. The chartered accountant was asked to certify or rather give the utilization certificate. Now, what he prepared, the bank had already made the disbursement to the vendor, and this is a reputed gymnasium company. Now, when he asked why the equipment is not yet fixed or erected or delivered, they told him that basically their interior is yet pending at all these 9 places. So he trusted them, and it was found that all the 27 crore rupees which were disbursed by the bank were swindled away by the company with the holding company and subsidiary company chain. It was gone And now we have to see what exactly further they should have verified. And therefore, don't go by just appearances, go by just reputation and other things. In Satyam case, same thing happened. Because the Satyam case was basically, they had won the award, Golden Peacock Award for the governance, international award. Now, if that was the case and if we trusted them, so they say that if at all you have to trust and you are doing good faith, then audit is not required at all. Then you certify anything in good faith. So this was the approach of the government and the regulators. And remember, even if they, because of your misconduct, there is a loss to someone, even if you compensate the loss, still there is no defense. I think I am exceeding the time, but I must thank again the CP committee because I had to, please excuse me because I had to do it very hurriedly. And there are so many things which I wanted to share, but yes, I thank everyone for this wonderful opportunity. And it's a good initiative that young chartered accountants get this knowledge so that they are more cautious and the number of complaints and the pendency also will get reduced. And I wish all of you a very good professional career and a very good image in the society so that we really get that respect and the credibility that we truly deserve. So thank you very much and Jai Hind.
Thank you, Chandrasekhar sir. Let's move on the question and answer session. I have received several questions and I will take it based on the relevance of the topic. First question is received from V. Subramaniam Iyer sir from Kochi. He is asking that can code of conduct limit period to initiate action beyond 7 years when there is no similar limitation in CRPC? Even after recent amendment to CA Act, can disciplinary action continues for an indefinite period?
Now that let me clarify that. There is a time barring for filing of the complaint, but that time barring is a very loose type of time barring. Let me clarify that actually that particular clause says that within 7 years you have to file a complaint, provided with the director discipline can refuse to entertain a complaint if he is satisfied that because of the efflux of time, production of the evidence is difficult or it is otherwise illogical or rather not possible to take the complaint to the logical end. Now, for example, that case which I cited about the signing of as a witness. Now, this is self-evident. If that complaint could be filed even after 15 years, because it is self-evident, there is no other external evidence required. So this is a conditional time barring. It is not a blanket time barring unlike in income tax and all. So please be very cautious that, so for example, the balance sheet two sides are not tallying. Schedule is not tallying with the main. So it is obvious. So wherever it is self-evident or obvious, then you don't get any shelter of this time barring. And therefore, that you have to keep always in mind. There is no external evidence required.
Okay. And second question is this, can CA in practice carry on business of delivery-based trading?
For yourself, yes. Now institute has permitted it, but you cannot do it for others. So even now, FNO and everything now institute has rather liberalized it, but that you can do for yourself only, not for others.
Okay. In view, next question is, in view of the recent judgment of the Delhi High Court in the matter of code of conduct, that the firm can also be taken to task by the disciplinary committee of ICI. What is the present position ICI?
ICIC, the act is getting amended. Earlier, now the basic principle is that the council has jurisdiction only on individual member and not on the floor. But the amended act, which is, to my knowledge, it is amended, it is passed also, but it has not been implemented. It says that the council can straight away punish the firm. And the condition is that, suppose you are held guilty, that in my slide it is mentioned. If you are held, any partner is held guilty in particular year, and within a span of next 5 years, another partner is also held guilty, or same that partner is held guilty again, then instead of carrying out all the inquiry and other things, council can directly punish the firm. So that court decision is basically in the context that council, as of today, they don't have any. That is why in Satyam case, the individual partners are the respondents, and whenever there is a complaint against the firm, the council first writes to you, director writes to the firm as to who is the person answerable on this. That is the reason is that the council has jurisdiction only on individual members, but now they can directly punish the firm. This is the decision.
One more question, and this will be the last question. A chartered accountant cannot exercise lien over the client document. Is it true?
Yes. Yes, you cannot exercise lien on the client's document.
Okay, sir. Thank you very much, sir. Thanks for the today's deliberation. Today's lecture was very informative, and we express our profound thanks to CA Chandrasekhar sir for sharing his view with us on a topic of such contemporary relevance. I think again, sir, for answering. Thank again, sir, for answering queries of our members and enrich their understanding on various issues. I want to quote few words for the sir also. To listen to scholars is a part of good habit. To listen to scholars is a part of good habit. It is a source to gain knowledge and lots of credit. Thank you very much, sir. Now moving towards the next session, second session, I ask our second session speaker to be on the podium. Sunil Agrawal, sir, are you there?
Yes, sir.
Yeah.
Audible?
Well, now we move further. First, I briefly introduce our this session speaker, CA Sunil Agrawal ji. He is a practicing chartered accountant since 2011, based in Jaipur. He is also a qualified company secretary and LLB graduate. He has completed DISA, Diploma in Information System Audit from ICI, and holds certification in Content Audit and Forensic Audit. He has extensive experience in PF ESI advisory, labor law compliances, and forensic transaction audits under IBC and others. He is a registered insolvency professional with the Insolvency and Bankruptcy Board of India, IBBI, and is empaneled as a peer reviewer with ICI. In this session, our eminent speaker will help us understanding the key provision of Provident Fund law, like what counts as basic salary, what is mean by an establishment, and in what situation two businesses can be treated as one for PF purpose. He will also explain how PF department inspection happens, what is a 7A inquiry, which documents are important to keep, and what options an employer has if an order goes against them. Along with that, he will cover the topics of interest, penalties, and how to stay safe and compliant with PF law. Now, over to you, Sunil Agrawal, sir, for your deliberation.
Thank you, sir. Thank you for your introduction, sir. Can you allow me to share my PPT?
Yes.
Sir, visible, sir?
Yes.
Thank you, sir.
I just want to update that right now 925 persons are registered for this webinar. Sunil sir.
Kindly unmute me. I think I'm not able to unmute from system.
Your voice is audible. Your voice is audible.
Yes. Sir, I am audible from mobile. I am sharing my screen from laptop. So I'm trying to, yes.
Sir, your voice. Sir, unmute Sunil sir. Yeah. Again.
No issue, sir. Now, sir, it is okay, sir?
Sir, mute your desktop version.
Uh, I guess, Sunil sir, you can continue with screen sharing, and you can just start the session. That's not a concern, sir. Sir, you can try turning off the laptop's audio and
Yes, sir.
turn on the audio from mobile. Yeah.
I request tech support team to just call to Sunil sir and guide him.
Sir, I am trying to connect with my another mobile, another system, but I think some issues there. So please give me 1 or 2 minutes to connect.
Sir, just share the PPT on WhatsApp. Our admin team will do the needful.
I have disconnected and now I'm against connecting you. Please, sir, give me 1 or 2 minutes, sir.
Okay.
Am I audible, sir?
Yes.
Now, sir, what I do, I share my screen and give me your uh, support, please, sir.
So, yeah, sir, there are two questions already regarding your session.
Sir, one minute, sir. I am sharing my screen, sir, please.
Okay.
Sir, my screen visible, sir?
Yes, perfect.
Thank you, sir. Thank you, sir. Thank you, sir, Sachin, sir. I am thankful to organizing committee to be part of this webinar and the topic labor law, specific focus on Provident Fund Act and other recent judgments and the critical issues. we all are aware that government of India has consolidated the labor codes. Once it will notify, it will replace the existing law. The PF law has been subsumed under the Code of Social Security. Recently, we are we have observed that the establishments are receiving number of notices from the PF department about the compliances and about the 7A inquiries. So today we will try to cover more important topics: Provident Fund Act, their compliances, legal issues, and critical aspects. Let's start. The today session will cover key definitions, contribution structure, compliances, what is 7A inquiry, what is the remedy against the order if the employer is not satisfied, what are the interest, rate of interest, whether interest is mandatory or non-mandatory, damages and penalties, what about the contract employees and exemptions, and we will later on focus on some landmark judgments. Now we start from the applicability of this act. We all are aware this act is applicable on the establishments where 20 or more persons are employed. Important thing to understand this topic, this issue, who will be counted in 20 employees, whether in case of company and directors are taking salary, whether it will be counted. Second, contract employee will be counted. And third important point, whether all employees cover are getting a salary more than the prescribed limit, whether they will be counted or not. We understand one by one. Employee who is directors will be counted if he is a salaried employee. Irrespective of the amount of salary, every employee will be counted in 20. We receive number of queries, sir, we have only employees whose salary is more than the limit. Whether we will have to do the compliances of PF Act. If the number of employees exceeds 20, yes, we should do the compliances because this act is applicable. You have to file the nil returns, but you have to make a compliances. Regarding contract workers, sometimes it may happen the number of regular employees are less than the 20, but including the contract workers, it may exceed 20, then this act is applicable. Second, the organizations who are not liable to make compliances under this act, means we can say that this act is not applicable, who can opt for voluntary compliances, voluntary applicable. When the majority of the employees and the employers agree, they can apply for application of this act to that organizations. This act is applicable to entire India, including Jammu and Kashmir. One important point to note, once this act is applicable, it will remain applicable even if employee count dips. Once the number of employee reaches to 20 or more than 20, then this act will remain applicable irrespective of the facts. Later, the employee counts dips to 20. Now we will move on exemptions. In the organizations, the establishment on which this act will not be applicable. There are in section 16, there are three categories that are specifically excluded. One is cooperative societies, but the conditions, the number of persons are less than 50 and they are working without the aid of power. And second is government owned or government controlled establishment. But basic condition is that not only by owned by the government, it will not exclude, it will not exempt. Important point is that and there should be a scheme which is similar to or more favorable than the APF scheme. Then exemption may be granted to that establishments, that employers. When important points there, recently MCA is providing the mandatory registration numbers for PF, ESI at the time of incorporation of the companies. And right now, the department are sending notices to the companies for non-compliances. So now the question arises whether the act is applicable when MCA provides the mandatory registration. The answer is no. This is for ease of doing business, not for the applicability. Now the question arises how to handle the notices. We have to make a professionally reply and mention that once this act will applicable to us, we will start compliances. At present, this act is not applicable. Our number of employees are less than the limit specified in the law. Now, we will discuss two important definitions. We have observed the huge amount is assessed by the PF authorities due to the definition of basic wages. We read as per the law, as per the act, the definition of basic wages. It includes all emoluments earned by the employee, but does not include the three important parts: cash value of any food concession, any dearness allowance, house rent allowance, overtime allowance, bonus, commission, or other similar allowances. And third is any presents made by the employer. The important point, a disputed point, the common issues. In second point, dearness allowance, house rent allowance, overtime allowance, it is not the part of basic wages. But how we will determine if the allowances paid in the name of overtime allowance are overtime allowance, a bonus paid in the name of bonus are bonus. Because if we provide overtime allowance and it is not connected to overtime, it will not be treated as basic wages. We will discuss in this judgment RPFC versus Vivekanand Vidya Mandir. It is very important judgment. On the basis of that judgment, PF department has raised huge demand on number of establishments. So we will have to consider, we will have to study about this case law. It says if allowances are paid uniformly to all employees, it will be the part of basic wages. Because we pay the PF amount on basic wages plus dearness allowance and retaining allowance. What the establishment do to reduce the PF amount? They structure their salary, the employee salary in that manner so PF liability can be reduced. But after that judgment, establishment has to reconsider their salary structure. However, they mention in their salary structure in the name of overtime allowance, bonus, commission, but it is not in the nature of that. Then it will be the part of basic wages. For example, overtime allowance are paid to the all employees, irrespective where they have done the overtime or not. Then department will not treat it as overtime allowance. It will treat it basic salary. Similar bonus commission, we have observed that establishments have restructured their salary, employee salary by mentioning that bonus commission, but they are not performance based. They are not output based. So it is the part of basic wages. It is not the bonus. It is not the commission. However, nomenclature has been given like that. Second point, the cash value of any food concession. It is not included in basic wages. But when we will study about when we will read the explanation of BLS allowance, then it will include to pay the provident PF amount on that value also. Let's move on the another definition, employees. Second critical issues, okay, who are employees? Very broader definition has been taken by the PF department because it is the welfare law. Any person who is employed for wages in any kind of work, manual or otherwise, in or in connection with the work of an establishment, who gets his wages directly or indirectly from the employer. We have to understand two important points. Gets his wages directly or indirectly. Because what happens, we establishment do the mechanism in that manner, so it is not directly connected. But if it is in connection of the work of establishment, then it will be also covered by the employees. It excludes apprentice. Apprentice the apprentice, all apprentice has not been excluded. Only that apprentice engaged under the Apprentice Act and under the standing orders. What happens? Establishments engage the number of trainees, the apprentice, but it does not compliance the Apprentice Act, and it is not registered under that act, and excludes in the PF liabilities. When the 7A inquiry is done by the department, it makes addition the liabilities on an apprentice part. So to exclude under the definition of employee of apprentices, it may be covered under the Apprentices Act or it should be the part of standing orders. We will have to understand the meaning of establishment because this is the very important part. What is establishment? Section 2A, establishment to include all departments and branches. In law, it is clearly mentioned for the removal of doubts. It is hereby declared that where an establishment consists of different department, branches, whether situated in the same place or different places, all such departments or branches shall be treated as part of the same establishments. This is very important sections due to which the clubbing of establishment concept is there. What happens? We have observed that number of companies are run from the same head office, the same premises, common HR, common accounting, common other employees are there. But compliances for the PF compliances, they treat as a separate and saying that we are distinct establishments and does not fall under the PF compliances. So we will have to understand section 2A very clearly, and we will also discuss a judgment where it has been specific mentioned by taking a separate registration, you cannot escape from the compliances unless until this is the genuine and genuine. We will discuss some important tests on the basis of judgments, the recent judgments, on what grounds the department can clubbing the establishments and make the addition of liabilities. So establishments have to consider their organizational structure, whether common ownership, common management are there, then it will include all employees from all companies to make the compliances. I have mentioned here at one case, Sri Vishal Printer Limited. Their Supreme Court applied the concept of functional integrity test. If different companies are managed together, share staff, or operate in a coordinated way, they can be treated as one establishment. Now, major issue arises when an employer operates multiple units. So, organizations, establishments have to consider their structures when doing the PF compliances, whether they are separate establishments or they should club. Otherwise, under the 7A inquiry, the PF department can make huge addition. There are certain parameters I have mentioned here. Ownership and management control. Is there common ownership? The establishments have shared directors, partners, or proprietors. Is there common controlling minds? We have observed real estate cases. There are different companies are formed for the different projects, and there are different promoters with the common promoters. So this concept, they have to examine whether clubbing may be there or not. Now, move on contribution structures. We all know the employer share 12% of 12% contribution. 12% contribution is of basic salary, DA, and retaining allowance, if any. We have already discussed about the basic salary. What is basic salary? Similar amount is deducted from the employee salary. Same amount is deducted from the employee salary. In addition to the contribution, admin charges 0.5% and 0.5% as in EDLI employer pay. Employee only bear the 12% and employer has to bear the 13%. Now we will have to understand pension fund, provident fund, because the employee share that goes to directly in provident fund, but employer share are distributed in two parts. 8.33% goes to EPS and 3.67% goes to EPF. One important point to note: if employee salary is more than the 15,000, then there are capping. Employer is liable only to pay 12% only on rupees 15,000. However, employee can opt for higher contribution, but employer is not liable to pay the similar amount exceeding the 12%. monthly compliances, we all know the return must be filed by the 15th of the following month. If timely deposit not there, then interest under section 7Q and damages under section 14B are levied. So monthly compliances should be there. One important point to note here, tax auditor at the time of filing the tax audit report mention the due dates and date of deposits. If date of deposit is later than the due dates, actual date of deposit, the actual date of submitting of the return is later than the due date, then it is mandatory to imposition of interest under section 7Q and under section 14B the damages. But auditor does not consider that points because this is the mandatory liability. So we should also point out that points. Now we will focus on very important parts, section 7A inquiries. What is the section 7A inquiry? This inquiry object is only to determination of applicability of this act to the establishments or assessment of dues. This is the quasi-judicial process. The PF department has the civil court powers and asks the number of informations, including the bank statements, salary receipts, attendance register, wage registers. The professional representation is highly recommended. What we have observed, the employee of the establishment submit the informations without the reconciliation of salary receipts with the bank statements, with the financial statements, because generally what happens in department issues the 5 year notice for 5 years and HR or accountants change. Accounts team and HR team are not well connected, and HR does not in medium enterprises, the medium establishments, HR does not maintain the fully documents of employee appointment, employee termination. Assessment can be reduced. Yeah, PF liability can be reduced if the establishment has maintained proper documentation. Here we will study how to submit the documents, which documents before submitting we should reconcile. Two important points we will check here. In financial statements, we don't check the nomenclatures mentioned in the profit and loss accounts. What the PF officer do? He check the expenses, nature of expenses, and ask about the details. For example, it has mentioned the repair and maintenance. So it might be there, labor components will be there. The contract for service can be given. But we have not the details of the contractors who have worked. Then what would happen? It would deemed liability. It will create a deemed liability. It will take a certain percentage on the basis of the nature of expenses. For example, if it is a civil nature, it may deem 30% of wage components, and on that components, it may add the liabilities. So it is advised to the establishments when he is awarding any contract, it should maintain the details of the contractors, wage registers and should ensure whether the PF compliances have been done by the PF establishment contractors or not. Maintain salary records, proper registers. If establishment has maintained these records properly, then it may help in assessment under the 7A inquiry. Now, the important point is that if the establishment is not satisfied with the order under section 7A, he may apply for review of that order. He may make an application on reasonable grounds. Even if this application is rejected, he may file appeal under section 7AI to the tribunal. But the precondition is that 75% of the demand should be deposited. However, the pre-deposit may be waived by the tribunal. Like income tax and other departments, there is also section 7C, determination of escaped amount. If any assessment is made, even under section 7A inquiry, but if it has been found by the PF authorities some amount has been escaped, then it may pass the order under section 7E, 7C for reopen the case. But before this, reasonable opportunity for representing the case should be provided to the establishment. We have discussed appeal. We should pre-deposit 75%. Now we have already discussed about the interest and damages. Interest is mandatory at a 12% simple interest per annum. And section 14P, it is very important. This is a penal damages. Earlier, there are huge penalty, huge damages, 5% to 25% per year, depend on the delay. But now recently there are changes and it has been reduced to 1% per month. But it cannot be, the penal damages under section 14B cannot be more than the arrear amount. Now we discuss about contract employees. We have already discussed it will be covered under the employees and same treatment should be there. So principal employer has to ensure itself whether the contractor is doing the compliances or not. One important point is that we have observed establishment says that the contractor is not registered under the PF Act because its employees are less than the limit. Then it is the principal employer duty to make compliances for that employees directly by that principal employer. If contractor is registered, then it is the duty of the employer to ensure itself whether the contractor is doing compliances for that employees or not. What happens? The contractor provide their bills and provide the ECR copy and challans, but we don't check the employees provided by the contractor to that establishments are mentioned there or not. So establishment should check whether the employees are in the list provided as per the supporting documents. Now we will highlight some important judgments. Vishal Printers Limited, where we have checked 3 companies are there and they are separately registered, but department under the inquiry held that these are only for reducing the PF liability. So court held on the basis of functional integrity and treated as all 3 entities as one single establishment. Vivekanand Vidya Mandir, we have also discussed in the meaning of basic salary. In this case, special allowance were paid to the employees and PF not paid on that amount. Department added liability on that amount and Supreme Court held that such allowance must be included in the calculation because it is not the allowance, it is the part of basic salary. In the Central Ericonot and Cocoa Marketing Cooperative Limited case, this is the related to apprentice we discussed. In this case, the employees were the trainees were under the standing orders, so it was excluded under the employees. So we have already discussed in the definition of employee. If apprentices are under the Apprentices Act or under the Model Standing Order, then it will not be treated as the employee. In organochemical industries, in this case, it was the related to mens rea concept. Court held that to impose damages under section 14B, no mens rea are there. Willful default is not necessary. Thank you. I have summarized. Now I invite your queries. I will answer you. I will try to cover your queries. Sachin sir, over to you, please.
Thank you very much. Just a few questions are there. I'm just asking one by one. First question is there that if salary is more than 15,000, whether PF is not at all compulsory or on 15,000 have to be paid.
At the time of joining, we take the undertaking whether employee is registered already under the EPF or not. If at the time of joining he is already member of EPF, then PF is applicable. Otherwise, not.
What if an employee is foreign employee and he had PAN and Aadhaar card from Government of India as well? He is willing to work in Indian company.
Yes. Then question. I'm not able to understand. What is the question?
What if an employee is a foreign employee and he had a PAN and Aadhaar card from Government of India?
Yes.
If he is willing to work in Indian company, the applicability of the PF Act.
There are certain separate provisions about the international workers, and the parts, the provident fund and pension fund. So the fund directly goes to the provident fund, and pension provisions are not applicable equally. Similarly, the provident fund act is applicable.
Okay. Whether CFM has exempted from registration in EPF Act?
Sir, nowhere is mentioned whether it is exempt.
Who are considered contract workers?
Contact workers, we have to understand two things: contact of service, contact for service, and contact. It may be if we understand the contact for service, because what we have observed that huge liabilities are increased in case of contact for service, as we mentioned earlier also. For example, you have given a civil contract for repairing some your go down your offices, and independent contractors does the work, but you establishment does not ensure whether that contractor is doing compliances for the employees working in that establishment. It may also be the part of contract workers. Contact they are second things, the employees appointment through the contractors are also contract workers. Third, the fixed duration contract. We hire the employees on for fixed duration. They are also contract workers.
Okay. The next question is that a person can keep its fund in EPFO till 58 years. So whether
Yes.
interest received from EPFO after cessation of employment is taxable, assuming the person was in employment till 15 years before quitting.
Sir, taxability point of view, I think I am not clear, but it is under the Income Tax Act, it is treated as like a RPF, recognized provident fund, and I think the withdrawn is not taxable. I think I'm not clear, but it is under the Income Tax Act.
Can I see one more question? EPFO has introduced family pension from 15/12/1995. Accordingly, those have contributed through employer. ये तो question. It's not a question.
The question is that, sir, ki we have here we have discussed that employer part. Employer 12% part is bifurcated into two parts. First is EPS and second is EPS. The 8.33% part goes to the EPS, and remaining 3.67% part goes to the EPF. So under EPS scheme, the pension is provided to that employees. There are certain conditions. I think minimum duration of service is 10 years or others.
One more question from Vinesh Baldia ji from Mumbai. Are foreign directors who are not drawing salary from the company covered under PF?
No, director this is it does not impact the applicability. We will have to check the counting of their directors in the 20. We have discussed earlier. This act is applicable where 20 or more persons are employed. For example, there are 19 employees and one is not withdrawing the salary. Then it will not be counted because he's not drawing the salary.
Okay. Freelancers who are working for us on a continuous basis for more than 6 months, are these people considered as contract workers?
Sir, we will have to focus on the documentation. What would happen if documentation is not proper there? Then it can be added, but specifically it is not included.
Okay. If a PSU having own PF trust employee switch to job, how will EPF 95 will be taken care of?
There are provisions in the EPF Act under Section 17. These establishments are called as exempted establishments. They maintain their own trust and they deposit the provident fund. There are conditions they should provide the benefits similar or higher compared to EPFO. If they switch over, then from the PSU to others, then PSU will transfer that amount to the EPFO.
One last question: whether temporary workers like painting, repairs, etc., will be counted for the CESAR limit of 20 employees?
Yes, sir. They are. If we read the EPF scheme, and there are no any exclusion. And in the EPF scheme, it is mentioned ki if you pay the daily wages, on day basis, fortnightly basis, weekly basis, so then you should consolidate the amount paid on that month, and then after pay the PF amount. There are no exclusion of daily employees, temporary employees.
Okay, sir. Sir, the final question is there. Now, I am going to conclude the session. Thank you all for joining this wonderful session. It is an immense pleasure, pride, and honor for me for me to propose a vote of thanks to the dignified, distinguished personality, say Sunil Agrawal sir. Now, from his deliberation, we can understand the seriousness and severeness of this part of enactment. We are fortunate enough that CP committee is regularly conducting this type of webinars and on every Friday for enhancing the knowledge of the members. And I also express my sincere thanks to all members attendees and especially thanks to Aditnath Tiwari sir, Deepak sir, Deepika Chaudhary ma'am, Poonam Tyagi ma'am, and all the team of CP committee for necessary arrangements. In my concluding remarks, I would like to extend my gratitude to the committee chairman and vice chairman for giving me this opportunity. Lastly, thank you to all the members who attended and made this seminar a grand success. With that, I conclude this session. Thank you. Thank you all. Jai Hind, Jai Sri.
Thank you so much, sir.
Thank you, every team member. Shall we log out?